Hello and welcome to another episode of Optimum TV. Today's episode is a little bit of a teaser for the Optimum Healthcare Conference, and today I'm talking to Gareth Pohl, Head of Healthcare at Polar Capital. Hi and welcome, Gareth.
Hi, Eva.
Good to have you with us. So the title of our fireside chat, which this is a teaser for, is Investing Through Cycles, making use of your long and storied history and expertise in healthcare. So I thought I'd first ask you, what are cycles in healthcare, both macro and within healthcare itself, and how do you see them affect investing and where we are right now?
Yeah, so I've been investing in healthcare since '99, I guess. And you see numerous cycles impact healthcare investing and biotech investing, whether it's innovation cycles, which, can, take as long as 10 to 15 years, economic cycles, and, other impacts which can really drive big differences in returns for investing in the space. If you look at where we are now, biotech's having a really good phase. So dial back a little bit, 2020 to 21 was a really great period. And then you had a bear market in small mid-cap biotech. Tough times from 21 through till sort of middle of last year, and then now we're on a really great run. There's lots of clinical data, lots of M&A, so we're in a really good place right now. But yeah, seen lots of cycles, the different drivers each time, but there's some commonalities as well.
And what sort of in the last 12 months or year to date are the sort of three things that have stuck out so far?
So I guess I'd start with we've seen a big pickup in M&A. Following the US election and leading up to that, it was a very quiet period, and then really from the middle of last year things started to pick up, and then this year to date it's been very active. We're seeing the big guys, big pharma, big biotech buy smaller companies. We're seeing big medtech buy stuff, and we're also seeing private equity buy medtech. And then services is an ongoing consolidation story. So that sort of continues along. So that's major one. We've seen some really groundbreaking data from lots of different companies. So that's really exciting. And then I guess, always topical, the GLP-1 space. We've seen the next product cycle there with the orals launching, which have generated some fresh excitement. And then, there's further drugs to come into that space, potentially non-GLP-1 targets as well. So they're the kind of three key things that year to date have been really important.
And have we seen increased competition in key areas? And what about China?
Yeah, really important. So if I look at this cycle, compared to others, a lot more companies around, getting really well financed if they have interesting assets. You're seeing a lot of competition in certain areas. So oncology's been sort of hyper competitive for a long time now. So there's a huge sort of bias of investment there. Immunology has become ultra competitive as well. The focus there is particularly around longer acting drugs, so shifting from once a week injectables to potentially once every 3 months. Maybe we can go longer, patient convenience, etc. So that's a new trend, and the big change with this cycle, really big change, has been the output sort of on the innovation front from China. So the last 18 months, the licensing flow there with, big pharma, big biotech licensing, and even some smaller size companies licensing assets from Chinese companies, significant transaction costs for these deals. The sheer scale of it is impressive. So definitely a lot going on there, and it's a very different makeup from other cycles, just in terms of the sheer number of companies, the number of drugs in development, it feels like. But normally that's a really good thing. What drives, if I look at the healthcare investment universe, 80% roughly is product companies. What drives the individual stocks of those companies is product cycles. And if you have, in theory, lots of new product cycles, that should be bullish for the whole sector.
And just very quickly, in terms of capital raises, what's different there right now?
I think this cycle is just the sheer size of them. So there's a lot of demand for particularly secondary raises. I mean raising fresh capital, but from already listed companies. There's not ridiculous amounts. We've seen a steady flow, but I have to think that most of upsize those raises, not crazy amounts, but there's definitely interest in those. And then we've seen some IPOs, again, not crazy amounts that would sort of scare you about where we are in this cycle, but we've seen a steady flow, and raises seem okay there as well. So, pretty constructive environment, I'd say, in respect to fundraising. Nothing crazy going on that would be a red light to sort of where we are in the cycle.
Brilliant, thanks, Gareth. So, look, everyone, this is a bit of a teaser for the Optimum Healthcare Conference, which is on the 8th of October. Everyone, please do come along, and at that point, we'll dig under the kimono a little bit and do some crystal ball gazing, and it'll be, I'm sure, a wonderful talk with you, Gareth. Of great interest for everyone. Looking forward to it. And thanks, Gareth, for being our guest.
Thanks, Eva.
Are you watching Optimum TV? In our bite-sized episodes, we talk to European life science leaders about the hottest trends, innovations and capital market developments in the sector. To subscribe, visit @OptimumComms on YouTube. You can also watch all available episodes on our website, optimumcomms.com.